All right. Good morning, good day, good evening. Depending on the time you're catching this broadcast, my name is Peter Pedro Diamond. Pedro. Um, um, Good. So here, I hope you were able to see my last video, and the last video was not. It was initially not intended for the general audience. It was actually a video I prepared for a community I belong to, a community of experts. I was actually sharing my views with the rest of the community. Um, so it was initially not intended for the general audience. The one I intended to share with the general audience, well, with both newbies and experts alike. I had some challenges trying to upload the video, so I had to just post this one to kind of replace that one. So I realized the little feedback I've been able to get so far from, especially the newbies, is the fact that everything seemed like gibberish jargons to them. Everything seemed like they didn't seem to understand. I know of a couple of persons who reached out to me asking me to you know help break down what's happening in the market currently. When I asked them, I referred them to this video, they were unable to comprehend. Basically, some of them never failed to even get back to me. So it was a clear indication that these guys were unable to fathom what I was actually explaining in the video. Everything seemed like gibberish. So I sincerely apologize for that. It's my doing. It's my bad. So I take the blame for that, and I'm trying to see how I can, try to break these things down step and bit by bit. I'm not going to put everything in one video because I don't want it to be a very lengthy video so you don't get bored along the way. So, but I'm going to make it in such a way that I will just try to pick it bit by bit, section by section. I'm just going to be talking about it section by section. So, um, I'm going to be, I made a, I realized I mentioned a couple or a ton of gibberish, jargons, technical jargons in that video. And um, so I'm going to just pick them one by little video as much as I can and then explain each section bit by bit. So today I want to make it lay more emphasis on um, market structures. Basically, what you saw in the entire chart that day was a market structure thing, you know. So market structures, basically, when you're trying to analyze charts, one of the first things you need to look out for is when you look at a chart, the first thing you want to the first question you want to ask yourself is what is happening on that chart? What is that chart doing? So the terminology for that in technical analysis is market structure. It's under a subject called market structures. So for every asset, whether crypto, forex, stocks, metals, commodities, and whatever it may be, whatever asset you're dealing with, they're basically undergoing a certain structure at a particular point in time. So there are three structures that any asset could be experiencing at any point in time. Um, if you look at your chart, the first thing, your chart, your assets could either be trending, um, ranging, or what we refer to as consolidation, consolidating, and choppy. So, so that so currently, what I explained in the previous video, I was trying to explain the current state of the Bitcoin chart. So I made mention of Bitcoin being consolidating between two key levels. which I came to observe to be the key levels that will determine the state of the direction, the next direction, the direction to which the um, Bitcoin will go, and the market as well. So I refer to these two key levels as 30K level or region. Rather use the word region because it's more like a region than a level, and the 42K region. So that is the current phase that Bitcoin, that's the current market structure that Bitcoin is experiencing at the moment. It's a consolidatory or ranging um, structure. So I'll first be dealing with the trending structure. I'll dive uh, more into the I'll dive more into the ranging later. I want to start with the range this trending structure because I think that is the one that is most familiar with virtually everybody. So the trending structure, there are basically two trends and like a market could be experiencing either an uptrend or a downtrend. So by definition, an uptrend is a market that is making successive or consecutive higher highs and higher lows. So um, by higher highs and higher lows will mean I'm going to be explaining using a snapshot from Bitcoin. Sorry, yeah, from Bitcoin I made last night that I wanted to use for this presentation. So you just give me a second so I can get it out. So where is it? Where is it? Where is it? 42 BTC. I say BTC. No, 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 BTC market structure. Good. Okay. Yeah. Just hang on a second. I'm going to be using a pen to illustrate this. So where is it? Where is that? Slipping to. Please hang on a second. It's taking a little bit of time to come up to load the picture. So be patient with me. Well, okay. While that is ongoing, I'll just explain us. What do I use another one? I think I should stick with this. So good, it's up. So I'm gonna be using my pen. Good, good, good. So here we are, chart of Bitcoin, the daily chart of Bitcoin. Daily charts are usually very, very nice, very daily charts are usually advised like um, bigger time frames are usually advised when trying to make a case for what this market is, what structure the market is currently undergoing. If you try to use smaller time frames like the hourly time frames or the minutes time frames, those ones are usually have a whole lot of noise and have a lot of noise in them. They generate a whole lot of false signals, so their signals cannot be relied on. You using them to make judgments on a case, the market state would lead you, mislead you several times. So a daily time frame is usually recommended as an ideal time frame to use to make a case for the state of the market. So anything from the daily time frame and above, we have the monthly, daily, then the weekly, and then the monthly time frame is the best. Sorry, the highest time frames being used in technical analysis. So the daily time frame is usually very okay. It gives you a very good. It's good to go. to take care of um, a, a state what the market is experiencing. So I'm going to be showing you what I mean by higher highs. I'm going to be using a pen. Should I use? Yeah. So this uh, this and this is an uptrend. We refer to this as a high low, low high. This point is referred to as a low high. This is referred to as the high high. This is referred to as a low high. This is referred to as the high high. High high. So the start of an uptrend means this three set of moves. We refer to this as, I think I should bring out the other picture as well. Just a second. I've labeled something like this before in the past that I used to teach my students, so I'm going to use that as well to save time. Label something like this. This is what I wanted to use initially. So good. I think we can just use this straight up to save time. So I don't know if this is clear. I hope you can see what I'm explaining. So this is already labeled. When a market makes, in an ideal situation, an uptrend is supposed to be something like this. An uptrend is supposed to be something like this in an ideal situation. Straight line. So once you see anything like this, then it's a downtrend. That is in an ideal situation. But funny enough, we are not in an ideal world. What we have, it is not. This is not realistic. Because we are not in an ideal world. Back then in school, we have ideal cycles. Those of us who did engineering, mechanical engineering, thermodynamics and the like, we had what we call ideal cycles, and then we had the ones I can't remember what they refer to, the realistic ones. So um, ideally, an uptrend is supposed to just be trending up, no branching, just keep going up. That is what an uptrend is supposed to be, and then a downtrend is supposed to be this. So, but in a real world, that is not the case, because the marketplace consists of two forces, the buyers and the sellers. So at every point in time, these two forces are in play. So there's no time where only one force is just um, dominant, and then the other one is active and the other one is passive. Both are constantly at play, because at every point in time, when you're buying, you're actually someone is actually selling to you. When you're selling, someone is actually buying to you. So that is why it's like it's an exchange, a constant trade, like a trade by barter thing. A trading thing is, trading is, trading is only possible or successful. You only call it trading when both forces are in play, not only one active and the other passive. So both are always in play. So as a result of that, you're going to always have a point where um, after a move like this, for in an uptrend, after a move like this to the upside, there will be, we refer to this first move as an impulsive move. You're going to have a retracement, or what we call a pullback, where sellers will take control for a little while, but because the trend is still intact, we call it, in trading we say the trend is your friend until the end of the trend. So because the trend is your friend until the end of the trend, and the current trend is an uptrend, this pullback will only be for the interim. It's not going to like fall down and be at, it's not going to come down with the same magnitude as this impulsive move. It's going to continue with the impulsive move to the upside because it's an uptrend. The trend is still your friend till the end of the trend. Let me use the other picture to show you what up. So you have this an impulsive move, a retracement or a pullback, and then this again. This continues. So when in an ideal world, when you're supposed to just have a straight line like this that just goes up. Sorry, my need to erase this. So in an ideal world, you're supposed to just have this for as an uptrend. In the real world, this is what you now have in the real world. This now translates to this and this in the real world. So when these three elements, these three moves are established, you now have the start of an uptrend. So an impulse move to the upside, an impulse move to the upside, followed by a retracement, and then another impulse move to the upside. That is the start of an uptrend. These are the three elements that constitutes an uptrend, and once this is established, that is the start of an uptrend. So when this happens successively, continuously, then you are going to be having an uptrend. When this happens once, then it is the start of an uptrend, and then maybe along the line things go south, and then things turn around and then go south. Maybe the uptrend gets invalidated. But if this continues, like has been the case with Bitcoin from late last year till this year, say till like April, till like April when it got to a new all-time high of about $65,000. That was the case of Bitcoin and many other coins as well. We refer to them as altcoins. Every other coin that is not Bitcoin, we refer to them as altcoins. So Ethereum, BNB, ADA, XRP, Dogecoin that you've always been hearing about and playing about with, they are all categorized as altcoins. So that's the topic for another day. I don't want to even discuss that. I strictly want to stick to technical analysis. You can always read that up. So from this picture you can see that we have an impulse move, a retracement, an impulse move. This was using this picture, for instance, this is the start of an uptrend. We had another retracement, an impulse move continued, which means yes, we are in an uptrend, confirmed uptrend, because we have successive high lows and high highs forming. So if you remember the earlier labelings, this is a high, low high, high high, low high, high high. So this will continue, low high, high high, low high, high high. So this is an uptrend. I don't want to dwell. I've taken so much time on this. I think this should be explanatory enough. But if for any reason you're confused with this explanation, you can always let me know in the comment section. If you know me personally, you can always reach out to my inbox and then we could discuss more on this. I could throw more light on this, but I think this should be enough. I don't want to take so much time, so I don't want to make the video too long. So that is for an uptrend. So the second trend is a downtrend. So the reverse is just the case for a downtrend. For a downtrend, you're going to have um, first of all a low, high, a high low. Sorry, yes, a high low, a low low. Sorry, followed by a high low, a low low, followed by a high low, a low low, followed by a high low. So um, low low, high